Goldman Sachs and Morgan Stanley just releasing quarterly results. I know Goldman Sachs is trading higher. Let's get over to Leslie Picker. She's looking through the numbers on that. Hey, Leslie.
Hey, Becky. Yeah, Goldman Sachs reporting top and bottom line beats driven by huge gains in the business that advises on acquisitions as well as equity trading. The firm's global banking and markets division, which houses those two businesses, generated $10 billion in revenue, up 24% year over year. Advisory, which largely comprises M&A banking, raked in more than $1 billion and was up 71% year over year. Equity underwriting was up slightly, while debt underwriting was slightly down. Goldman said its investment banking fees backlog is higher compared with the first quarter and then the end of 2024 as well. Within trading, equities surged 36% year over year to $4.3 billion, a record for that group. Fixed income, currencies, and commodities gained 9% to $3.5 billion in revenue during the quarter. Asset and wealth management, a smaller but key growth area for the firm, they did see revenue decline about 3% year over year to $3.8 billion. The division was dragged down by some debt investments on the balance sheet. CEO David Solomon saying in the release, quote, "At this time, the economy and markets are generally responding positively to the evolving policy environment. But as developments rarely unfold in a straight line, we've remained very focused on risk management." Return on equity of 12.8% was nearly 2 percentage points higher than a year ago, although lower than Q1. Turning to Morgan Stanley, that firm also beating on the top and bottom lines in all three divisions, surpassing the street's expectations. Trading, a bright spot here with equities revenue jumping 23%, fixed income up 9% during the quarter. Total investment banking fees, though, those were lower for Morgan Stanley by nearly 5%. Advisory, which manages M&A, declined 14%. Equity capital markets, though, the unit that manages IPOs and follow-on offerings, that gained 42% to $500 million. Debt capital markets revenue slumped by 21% during the quarter. Morgan Stanley's wealth management division brought in $59 billion in net new assets and $43 billion in fee-based assets during the quarter. Net revenues were up 14% to $7.8 billion for that division, and investment management revenue was up about 12%. Expenses, though, guys, coming in higher here than the street expected. Compensation expense was $7.2 billion, above analyst estimates, while non-comp expense was also slightly higher than expectations. Still, return on tangible common equity was 18.2% in the quarter. Nothing to sneeze at. You can see Morgan Stanley shares very little change in pre-market on these results. I'll send it back to you.